Hi, Dale. Can you hear me?
Can hear you loud and clear, Peter. How are you, buddy?
Hey, great. Thanks. Yeah, pretty good. How are you?
Good, good. So I think we're at some crossroads here, and when I think about turning points and crossroads, I think about you and your work. You know, I follow it. I have people I mentor that follow it. People that are in F.A.C.E follow you. So I'm very interested in, for example, I know that you have said that we actually had a reversal signature in the S&Ps, and I want to talk to you about that because, you know, just like Ellioticians have alternate counts, and I've seen that you have alternate counts. Some people are saying this was only a 3-wave decline into the lows of Friday, and I don't know if you follow it, but you know, there was a Bradley turn date on Friday that so far is valid. What is a reversal signature? And we're not seeing your screen yet, buddy. If you could share your screen and give us what your definition is of a reversal signature. I use something very simple, Peter. I just count back 2 weekly candles to know whether or not we're above it or beneath it for 2-week reversals.
Okay, sure. Well, I'm just trying to activate my screen. I'm
okay. What a long question. So you go up on top. Right now we're looking at Let's Get Started, and there's a drop-down menu up there that says Share Screen, and you perhaps have it on the wrong screen right now. So maybe you try it again.
Okay.
Share
well,
screen.
let me just. I'm just deactivating it, and let me just click on this again. And it says, but how do I select which screen it goes on? Sorry about this.
That's okay.
Let me just. I did this before, and it was fine.
Yeah, we've done it a few times here, so I'm trying to figure it out. Maybe it's because I'm still a presenter too. Let me see. Maybe it's on my end.
Okay.
I know I'm the organizer and you're the presenter, and you have control of the screen. So
you can't see any of my screens at the moment.
No,
right?
I can see one that says Connect to Go Webinar. Let's get started.
Oh, okay. So I just got to try and figure out, because that's one of my
it'll show
screen.
Yeah, it'll show whatever screens you have up and give you a chance to click.
How do I select a particular screen? Do you know how to do that?
From the drop-down menu, it'll say Screen Share. Share screen.
And can I? And will it allow me to? Let's just see if there's any way I can switch screens. Oh, this is really not good.
Don't worry about it. We'll figure it out. Maybe you log out and come back in and try it again.
Hold on a second.
Maybe you're stuck.
Because there should be a way I can make another attendee presenter.
Well, I think I'm getting some help here.
Because I can't find. There's nothing that says select screen 1, 2, 3, 4, 5 or whatever.
Huh.
And there was before it allowed me to do that, and I can't see how it's doing that.
Okay, why don't you do this, Peter? Let's try it. Log out and see it, and come back in and see if it gives you the option.
Okay.
Again.
Okay. Stay with me tonight, and I'll be right back.
Okay. Thank you, buddy. By the way, Stella, if you're still here, I don't know, you may have left to go pick up the girls. Peter's having trouble showing the correct screen. I had him log out, and he'll be coming back in. So let's see here. He'll be coming in as, okay, there he is. Let me try it again. I'm gonna make you the presenter. Okay, Peter, try it now. Oh, no, he's not here. Okay, in the meantime, guys, do you have any questions for me while we're waiting for Peter? Oh, Peter's here.
Maybe this has come up now, so let's see if show my screen. This didn't come up before, so let's try this. It didn't give me the option.
Huh.
I just have a colleague with me, so I'm just trying to figure it out. Hang on a tick. Okay, we're going to try it one more time. Okay, I think there's a...
Maybe it's our software, or I don't know. It doesn't show me as the presenter anymore. Okay, Peter, if you can hear me, it says you're not connected to the audio now. Let's see what happens.
This would be... Oh, look.
Yeah.
That's
okay. That's a good
okay.
one.
I think. Whoa, what's going on now? It's gone. Let's try it
Click
again. Okay, let's try it. Okay, Dale, I think
Okay.
we figured it out.
All right, beautiful.
Can you see my screen now?
Yeah, we have the
Can you see an S&P chart?
Got it.
Okay, phew. Wow, okay. No pressure, right? No pressure, no pressure. Okay, good.
Sorry. I
Sorry, folks, keeping everybody waiting there. So
well, I was watching some movie, and it showed the old green screens, you know, people using Quotron machines. Things were pretty simple then. All right.
God.
Anyway,
Okay.
so okay, what to you is a reversal signature? Was last week the way it closed on a weekly?
Yeah.
Or I'm curious about what your definition is for a reversal signature.
Yeah, well, I mean, my reversal signature usually comes about if we get about a 12% drop from a preceding percentage gain. And we saw about 15% last week relative to this gain up here. So, I mean, we work out the point gain. We work out the point gain, and if we get about a 12% swing around, I like it particularly if that's combined with breaking out a previous low. It was marginal, but we did that here, and we took out this top here. I was writing up in my reports that if we relocated wave 4 to this grey one here, if there was some sort of running flat in there, this could be 1, 2, 3, and this could be 4. But you can see we've broken the overlap here as well. So generally, my rule is that about a 12 to 15% swing from the previous gain.
Okay.
And this was about 15%. But it's also conditional if you can get breaking out some previous sort of higher lows like that did, and it's penetrated. So that's generally how I'm creating a reversal signature. I mean that looks pretty good now to me.
You know, it's just based upon a percentage of give back based upon a previous advance or decline.
Yeah, the trick here is, of course, you've got to know where the previous upswing developed from. Well, it's pretty obvious it developed from December here, so that's a bit of a no-brainer. But of course, there might be other difficulties if you're looking at a third wave completion, for example. You've got to measure it from the origin of the third, not from the origin of the first wave, to get the percentages right. But it's just practice and knowing those things, and it's not too difficult to do. Ideally, of course, I used to work off in the old days on the basis that any intra-hourly 5 price swing event in the opposite direction to where we've been traveling to would be enough. But generally, sometimes you get either a 5-wave pattern in the opposite direction unfolding with too small a move to qualify a larger reversal. So I came up with this 12 to 15% rule. That generally works pretty well.
Cool. So what would negate this count and give you a different count that this is not a top? So, you know, risk management is everything. You had those areas up there. They were even as high, I think, as maybe 28.40 or 50. And any reason why we stopped at 28.20? That looking back, you could see now the reason?
Yeah, well, I mean, when the impulse pattern developed, we had this definitive 1-2-1-2. We could see that on the New York Stock Exchange Composite Index and the Wilshire 5000, which was pretty good. And we sent out an update back in January and said to everybody, don't be too quick to sell this market on the rally, because even though there looks to be 3 price swings that started this kickoff, we think that this is an impulse wave, and I can show you that in a moment, what we forecast at that time. But one of the price ratio measurements, if once this dropped below this overlap, we could basically eliminate getting up to 28.70. Otherwise, this would have been a first, second, third, fourth, and fifth would have taken us up to those numbers. But in actual case, if we take a correlative ratio 1 to 3 here, pull back, and I mean extension ratio, 1 to 4, you can see it's coming in there, and that's a minimum requirement for finishing a fifth wave, and we've done that now. So I don't think there's too much trouble with that. We can see it on the subdivision here. You can see here we go back to the fifth wave, 1, 2, 3, 4, and then this fifth wave coming in. Here's 28.18, and actually technically it's a fifth wave extension. So fifth wave extensions, whenever that occurs, I always extend 1 to 3 by 61.8. This was a very good measurement back in 2011 to depict silver topping out at just below $50. That was going on a fifth extension, and if you do that and just click, you're going to get the extension level coming in. So yeah, this break, you see this break below the 27.37 3/4, this level here on Friday, that was very important to negate any top. So the only time, in answer to your question, the only time this would now negate is if we break that high.
Okay, so you have to risk the high of the move to know if there's more coming.
Probably that secondary high here.
Yeah.
What's that?
2,800 about.
27.99. The actual high was because this could technically be 1,212. So you could come up a bit higher here, but that's your stop level. So you have to protect it from there, really.
Okay. All right. So good call on flipping in the precious metals, Peter. You saw something different. I mean, last time we were on, thought after that rally, maybe we'd see 1120 again. But after we had that rally, the way it started to go, a WD GAN, if you don't learn how to change your mind, you won't have any change left. And, very nice, not being stubborn. You had evidence the way gold recovered that said it was different, that it was starting to show bullish implications, and silver as well. So where are we at there after this recent pullback?
Well, the pullback is quite interesting, really, because it's not a typical Elliott correction. It has unfolded into 3 ways, but the third sequence down to last week's lows at 1281, that's what we call price expansion, and that's characteristic of third waves. And that's very difficult. I think probably one of the most difficult things in Elliott wave to learn or to be aware of is that, if you have an impulse wave, you get something like this going on. And then you have this is a third wave, of course, and then you get a fourth and a fifth like that develop. But sometimes, and this is really where the headache comes, you can have A, B, and then you have an elongated C like that, and it looks exactly the same as a third wave. And that is one of the biggest problems with Elliott wave, where you get this happening. Now, it doesn't happen so often, but you have to be aware that it can happen. And it's a real mind boggler, because you can never distinguish, unless you're within the larger sequence, whether you're going to have a fourth wave rally and then a fifth down, or whether you've actually changed direction. When I looked at this initially, I thought, well, okay, we work on the terms of probability. This downswing is exhibiting price expansion, which is typical of third wave behavior. So this could be a fourth and a fifth, but that means a fourth wave correction in the larger schematic is really very, very deep. And I'm getting, concerned then that it's going to be as deep as this, which is going to come into close proximity of overlap. But in this particular case, I could see that there might be some dollar weakness coming back in the short term.
Okay.
And I took a bit of a probability risk and said that this is probably an elongated C wave within a zigzag, and that the gold is going to resume its uptrend, because this is about 38% from here, from the November low. It's a bit more, actually, a little bit more, I think, if we go up and measure it. You can see it's a fraction more, but not much. But it's in the right area. And so I thought, no, look, let's play the probability game in a different way here. Let's see that this is an elongated C wave. I don't often predict those, I have to say, because they're very difficult unless you know what the bigger picture is. But I have to say that when you look at the bigger picture, and you've got 5 waves up here, can we prove that 5 waves up from November's finished? Yes, we can, because if we go to the, let's put in a fib 1618 extension, and we go to the initial 1212 sequence here and extend that by 1618, you can see there it is. There's the projection.
Yeah. You know what made me think it is that it's that this is a possibility is because if gold did decline to 1250, wouldn't it, you know, just in sympathy, negate the bullish picture in silver? Like silver went far enough on that pullback that, you know, if it started trading, you know, back around, you know, back underneath, let me just look at the level, you know, that $15 level. I mean, where would silver be if gold was going to 1250? So, you know, $14, you know, so if silver's good, I don't think gold could go to 1250. Do you?
No, I don't. That's why I changed my mind last week. I looked at it again and I thought, actually, I see a bit of dollar weakness coming in. I think we're involved in one of these elongated C waves. They're really a problem, and you have to be very, very in tune with what's going on in the bigger picture to circumnavigate such things. But I think that's what's happened. Plus the fact that when I had silver down as an expanding flat here, because see this swing from 1550 to 1622?
Yeah.
Let's take a look at that. I'll just zoom in a bit.
What a nice stop hunt above the previous high before it turned lower. I mean, it took out the previous high by a couple of cents and then
which it should do.
Right.
It should do if it's a part of an expanding flat, of course. Here you can see I've put in a 60-minute bar chart, but can you see this distinct 3 price swing event up here?
Got it.
You see, it's not, you've got a very typical zigzag there. It goes up, you get a nice sort of break in the middle of the action here, and actually I do it like this. You know, this is a sort of a Gartley sort of thing, and you get this sort of like channel. So this is very typical. This is very typical of a zigzag, and you got 3 price swings down. We take out the previous high, so we know that's a correction. So now we just need 5 waves down. At first, I thought maybe, you know, there's a bit of a hidden 4th in here and a 5th. I think this is enough, though. It's not great. Normally, I like to see a bit more trading range for a 4th wave.
Is that an ending diagonal at the bottom? Excuse my amateur.
Well,
could it be?
you're trying to see the fleas on the back of an ant. You know,
Right.
I mean, okay. It's, I mean, yeah, maybe. I won't disagree. But look at the proportions. I mean, generally speaking, if you're looking at an expanding flat, about 85% will end up about within the 38% limit of wave A, which is here. So technically speaking, if it had been a nice synced 5-wave pattern down, it should have stopped 1524. The other 15% or 12%, it would have been 61.8%, and it even went beyond that. So that's an unusual pattern sequence for it to get down that far already. So I think that's the limit. And what I've done is in order to get a 5th wave measurement, I've extended waves 1 to 4 through by 1618. So I've done an inversion here to get up to 1693. I think that's going to be all right, actually.
Okay. So you're talking about potential dollar weakness. You know, my work on that high, you know, it's there was just so much momentum. The RSI reading in the Dixie was well over 80. It's hard for me to, you know, top pick something with that much momentum, but, you know, it could be a high, but normally it's not the high. So is that kind of what you're looking at here? Just a slight pullback in the dollar, or could it turn into something more significant I actually have some lines that come in up around 102 on my weekly chart. How deep can this be, and what are going to be the demarcation levels to tell us it's going to be more than a pullback to, you know, the low 96 range, as you're showing here?
Well, the biggest impact to what happened last week after the ECB news was that we broke this 97.36 level here.
Yeah.
Because up until that point, you could have measured up a zigzag here, and that meant a downtrend. Well, we were already pretty much clued up on the fact that it would continue to break that high, because this decline from 97.36 down to 95.83 does measure as a zigzag as well. And I'm starting to get pretty bearish on some commodities like copper. And I think there's going to be a big downswing. There's a combination of that, either dollar strength, or we're going to start to see a real downturn in the economic data points, which is going to pull copper down anyway. But I felt that there was a measure of dollar strength appearing in copper prices and a few other commodities, which is going to drag commodities down. And I was really waiting to see if we could break this 97.36 level, because that was a key point last week. If we hadn't have broken that, the dollar could have been a zigzag upswing from January's low, and it could have pulled us back inside the range for a more constructive range trading effect for wave B here in this box. So that could have brought it down. But the fact that we took that out means that we can't consider this to be a zigzag anymore, that the bias is towards the upside. So I think we're engaged in wave C up to 102.79. Wave C began from this low back in September.
Okay.
But this swing up from January, if I just pull up that chart again, this swing up in January has obviously got a lot of overlap. Now, it's either a series of 1-2s, and if it is, then the limit to this decline is about the 50% retracement back to fourth preceding, if this is a 5-wave upswing, and that will get us back to 96.76.
Okay.
But if it's possible that this is a leading diagonal, in other words, this is the first wave within this 5-wave sequence that began in January for minute wave 3. And if it is a diagonal, a leading diagonal, the subdivisions are 5 waves, so that's consistent with a series of 1-2s, so you can't make any distinction with that. But what we can do is, if this is finishing 5 waves as a leading diagonal, we just measure the retracements. Now that could bring us back down to something like the 61.8 area here. So what we've got to see now is, for both scenarios depict the dollar weakness this week coming in. For a 50% retracement of this swing, we'll stop here. And if it stops dead at that number and starts to turn up, look for your reversal signature and then buy the dollar. But if you start to sort of penetrate below those levels, then we might start looking at 96, around just above 96 even.
Okay.
But that's probably about the limit, I would have said, to the dollar's decline before we start getting the next swing up. And you can see the corresponding movement in the euro dollar, because again, a very important aspect last week with the ECB news was that we broke 112.15. That was very important to do that. That means that the downtrend's continuing. But we've got, there's a possibility this is also a diagonal. And if it's a series of 1-2s, then the second wave correction will trade up to the 50% area, 112.98 this week. But if you see it punch through that, then we might get to fourth preceding. So we're putting the fifth. And you can see, actually, that's interesting. Look, 61.8 area is back to here. That's potentially what the maximum I would expect. Don't forget, if this is a diagonal, this is the fourth wave. And Elliott always says that corrections often go back to the origin of fourth preceding degrees. So this would be coming back up to this area anyway. So if you don't see a reversal signature from just below the 113 level figure, that's easy to remember. If you don't see it there, and you can check the pattern before it happens, then and we punch through, then pull back the selling, wait for a slightly higher number up towards the 114 figure area, and then we'll put in the shorts back again there.
Okay, very interesting. And you know what? I wasn't even going to go there, but you're talking about being bearish commodities. You're not precious metals, so the economically sensitive ones, copper. There's a lot of bullishness in copper right here. I even thought that the chart looked more constructive to me than than the precious metals. But looking at things like Freeport McMoran and
Oh.
okay, so now we have maybe we could take a look at copper and see why you're so bearish copper. And does it have to do with perhaps this correction in the S&P and the numbers being global weakness becoming the strongest narrative again?
I think so, yeah. I think there's a definitive shift. Some of the banks that we've been talking to last week and even this morning are all getting a bit overworked up about the recent downgrades in GDP growth from the OECD last week. You saw that, ECB. We haven't seen much. I mean, you've seen a bit of GDP slow down in the US and down revisions a bit, but nothing too much there, which is one reason why the dollar, I think, will go up, because it's just a case that, okay, we're getting a global slowdown, but which one is slowing down faster than the other? Well, obviously, Europe's slowing down fastest.
Right.
The US will be an outperformer in that slowdown, so the dollar goes up. I mean, that's the logic behind it. But you see, copper, we declined. We're in a second wave correction. It began June last year here. And we've had a nice 5-wave swing down into August time. Now, don't forget August.
You're showing the NASDAQ. And, I'll tell you, Peter, well, I'm going to have you back. I didn't want to stop you, but your screen's been flashing throughout the interview between your charts and some kind of Windows insignia. But, well, the information is too important. I'm a little hypnotized now. I'll be, walking like a zombie saying, Microsoft. But anyway, you'll see it later.
I'm really sorry about that. I have no idea what's... And you can't see my copper chart right now.
No, right now it's a NASDAQ.
Oh, that's weird. I haven't even got NASDAQ up on any of my monitors. Okay. So hang on a tick. I'm gonna deactivate and reactivate and see what happens. Dare I do it? I don't know. I'm gonna try anyway.
All right, try, and if not, we'll wrap it here, and really appreciate you coming in. And
I'm sorry about that. No idea.
I don't.
How does that work?
Technology. It's something's going on today on Monday. So yeah, we're having. You're still showing the NASDAQ chart flashing.
I haven't even got the NASDAQ on any of my monitors, so I don't know how that's going to happen.
All right, well, I tell you what.
I'm sorry
for that. That's okay. For anyone listening that can't see your copper chart, can they contact you and get that look and perhaps some type of trial or something for them to,
Okay. No, sure. I mean, if you're listening in today and you'd like to see the copper chart, just ping us an email. Our email address is services@wavetrack.com. And if you can't find WaveTrack, just Google it and you'll find us for sure. And there's a help desk line on our website, which is wavetrack.com. So you can always request it there. And I'll know if you've been listening to us talk today. If you just mentioned copper, I'm quite happy to send that through. I'm really sorry that it's not showing, but generally speaking, Dale, what I'm looking at is, everybody's probably got access to a copper chart, but if you go back to last June, you'll see initial swing down in August, which times below with the initial decline in the euro, and the peak in the dollar, and we've been in a corrective pattern since. And copper's not quite ready, but it's almost ready to start turning down. It might jump this week up a little bit more, but a tiny bit, not much beyond the previous week. And then I think we're going to get a comparable decline that we saw in June to August last year, down again. And that, if you can imagine it, is what I'm trying to develop here. And I think that's showing us that we've got a little bit of a problem ahead here over the next few months.
Peter, thank you so much. You can also follow Peter. He's a must follow, in my opinion, at ElliotWave_WTI and ElliotWavetrack.com is also his website. And Peter, well, we'll do this again soon, and hopefully we don't have the hypnosis going on. But if I had to be hypnotized by anyone's analysis of market structure, it would be yours.
Oh, thanks. Well, I don't want to send you sort of like eyeballs like Car in Jungle Book. You know?
Yeah, you could put your watch away that you've been swinging in front of my eyes. But Peter, thank you so much for stepping up today and joining us. And good hunting, and always appreciate your views and outlooks. It's a very important part of my intelligence gathering, which I'm a big believer in, and you're integral in that.
No, thanks, Dale. Thanks very much to you and to everybody, and I hope you have a successful day, and we'll catch up again soon, and hopefully we'll get all the charts working next time somehow.
Okay, buddy. Everyone, that's Peter Goodburn. You're welcome, Forex Gal. Manny says get Peter back soon. We'll do that, promise. And that's a wrap. If you're in New York, go see the boys. Okay, go shake their hands. And we'll see everyone for Turnaround Tuesday. Good hunting the rest of the day. Thanks again, Peter. And see everyone tomorrow. Oh, I almost forgot the tagline. Anyone know what my tagline is? Don't just count your pips, count your blessings. And I'll see everyone tomorrow. Adios. Thanks, Peter.